Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news markets are in retreat worldwide. Firstly, today's dairy auction has brought sinking prices. In fact, it has now been 14 consecutive auctions since we've had a rise, and prices are now back to where they were in August 2016. Since May, prices have fallen 20%, so we're in a bear market for dairy products. Since the previous auction 2 weeks ago, we're down 3.5% in US dollar terms and down 5.7% in New Zealand dollar terms. Powder prices haven't fared as bad as some other products. For example, AMF is down 9.4% since the last auction, and butter is down 9.6%. All up, these are large falls, and this result will weigh heavily on Farmgate milk pricing forecasts, and more so because of the New Zealand dollar's relatively strong at present. US housing starts have come in weak as well. For October, they're down 2.9% below the same month a year ago, and even below some weak analysts' expectations. Building permits fared even worse, coming in 6% lower than the same month a year ago. And a clutch of American retailers reported poor results, and together with yesterday's news from Apple that they will cut order sizes for their new iPhone, that was enough to send Wall Street into reverse. In midday trade, the S&P 500 is down 1.2%, and recall it was down 1.7% yesterday. The drop is now a significant 2.9% in just 1.5 days trading this week. In fact, all of 2018's equity gains have now been erased. And yesterday, Shanghai fell 2.1%. These are large short-term retreats, indicating rising investor risk aversion. In China, the government's rescue plans for private industry financing is being gamed by some large investors who see it as a way to rid themselves of stocks which have little upside. This comes even as Chinese government is allowing tax payments to be deferred by companies under severe liquidity stress. And in Australia, the IMF has said the balance of risks to Australia's economy are tilted to the downside due to a deteriorating global outlook, urging the central bank to keep interest rates low. And the RBA has kept rates unchanged overnight, even as it notes the reverse of the IMF position, saying the Aussie economy is doing well and the risks of inflation are to the upside. And staying in Australia, it has been reported that internet traffic heading to Australia from the US and Europe was diverted via mainland China by state-owned China Telecom over a 6-day period last year, in what some experts believe may have enabled it to target data theft. China claims it was just a simple operational mistake, a claim few believe. And Australia has blocked a deal by a Hong Kong company to acquire a major Aussie pipeline business on national security grounds. The US Treasury 10-year yield is starting today a tad lower at 3.05%. However, their 210 curve slipped 4 basis points to 25 basis points as short-term treasuries rose. The Aussie government 10-year is at 2.70%, the Chinese government 10-year is at 3.39%, while the New Zealand government 10-year is at 2.74%. Gold is unchanged at $1,220 an ounce, but US oil prices are taking a thrashing today, down almost $3 a barrel to new lower levels at just over $54 a barrel. The Brent benchmark is just over $63 a barrel. These levels are the lowest they've been in 15 months. However, the Kiwi dollar is starting today little changed at 68.2 US cents. On the cross rates, we're up to 94.1 Aussie cents, and the highest since April, and we're at 59.9 euro cents. That puts the TWI at 72.7. And Bitcoin is lower sharply again today, down to $4,511, another $500 fall from this time yesterday, and an 11% dump in a day. At one point, it dropped to $4,280. Losses now exceed 25% in a week. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.